Hello, I'm Alex Blake, and I'm joined today by Matthew Brett, the lead manager of the Baillie Gifford Japan Trust. Welcome, Matthew.
Hi, Alex.
Japan Trust recently released its final results. How was the last year?
Well, obviously, it's been quite a strange and difficult year for the world with the coronavirus pandemic. The good news from a Japan perspective is that Japan has been relatively resilient to the challenge, with so far under 2,000 deaths across the country since the pandemic started. And in addition, Japanese corporates have a long history of having strong balance sheets, and that's meant that their dividends have been a lot more resilient than those from many parts of the world. And so, turning to the Japan Trust itself, this year the revenue actually increased by 13.6%, and that allowed the board to declare an increased dividend for this financial year. And relating to the overall performance over the past 12 months, the NAV total return of the trust was a positive 6.8%, compared with the benchmark, which fell by 0.1%. So overall, despite all the challenges and the excitements of the pandemic and financial markets, over the 12-month period, actually the trust was resilient and obtained a modest positive total return over the period.
Very good. And how is the Trust's portfolio positioned at the moment?
Well, we've got a little bit over half of the portfolio in secular growth companies and the remainder in other types of growth. Secular growth companies are those ones where we think there is the greatest long-term opportunity, but they're often businesses that are operating in fast-growing and changing industries. So there's more uncertainty and more chance that things don't work out as well. And another way of looking at the portfolio is we have about a third of the portfolio in internet-related businesses and another 14% of the portfolio in automation-related businesses. Our single largest stock position remains SoftBank, where we continue to believe that the combination of very good quality assets, a big discount to those assets, and value-added management create a compelling investment case, and that those three features together mutually reinforce each other. In terms of the trust overall, the gearing fell a bit during the course of the year, and net gearing currently stands at 4%. And that gives us substantial ability to invest heavily if share prices end up becoming severely discounted as a result of the ongoing market sentiment.
And what's exciting you most at the moment?
Well, as always, there are lots of things that excite us at the individual stock level. So, for example, Rakuten, the internet conglomerate, has been rolling out a mobile phone network in Japan, and they've been helped in doing this by the extra profits they've been getting from their e-commerce business at the current time as a beneficiary of the current situation. Also, SBI, the online brokerage. This is a business that we used to describe as Japan's largest online brokerage, but now on some measure it's become Japan's largest brokerage, which I think is a pretty good outcome. And they've also continued to innovate, looking at, for example, blockchain and tying up with regional banks in order to become a comprehensive financial services provider. And one other thing that excites us about investing in Japan is it seems that the premium that people pay for growth companies in Japan is not necessarily so high as in some parts of the world. So, for example, despite the fact that we have a third of the portfolio in internet-related businesses and the 14% in automation-related businesses, the price to sales of the overall portfolio on a forward-looking basis is only around 1 times, which doesn't seem to me to incorporate a great deal of enthusiasm for what we believe to be good quality businesses.
Great. And as you referred to earlier, it's obviously been an extraordinary year. How do you see things going forward?
Well, I think the good news is that the trust has been resilient to those challenges. As always, any kind of economic outlook is really, really difficult, and we simply don't know what the future holds, either for Japan or the world. But what I think we can say to be a bit optimistic is that it seems highly unlikely that the current pandemic is going to be a major issue in 5 years' time. And I think we continue to believe that holding a portfolio uh, of growing businesses is a good way to grow shareholder wealth over time.
Matthew, thank you very much for joining us.
Thanks, Alex.
For more information, please visit baileygifford.com.